Good afternoon to the folks that have logged in, and welcome to our 2025 Risk Officer Insights webinar. Well, I think this is a good chance, good opportunity for us to get started. So for customer-facing folks like myself, we often hear customers ask what opportunities are there for them to learn from their peers. The survey we'll be discussing today and the webinar are both designed for that purpose. Many of these customers value the engagement as it helps to give market context to their own experience and also identify areas where their organization may need to increase focus on. So I'm delighted to be here to share insights from 360 of your peers. And I want to thank you for your insights and your contribution to the survey over the last couple of years. So briefly, I'll cover the agenda for today and then let my colleagues give themselves an opportunity to introduce themselves. But our focus today will be mostly on fraud and the experience of financial institutions and payment systems. We'll examine attempted fraud and losses. We'll see the types of check fraud creating losses, where we look at the application of the fraud classifier model. Now let's take a minute to allow the panelists to introduce themselves. So starting off is me, Triandis Luke. I'm a senior relationship manager on our national accounts team. I've had the pleasure of working for the Federal Reserve Bank for the last 12 years. The last 3 years, I've had the pleasure of working on our national accounts team. The other 9 years, I was a regional account manager working on our regional account management team. It is my pleasure to be here with you today, and I'm really looking forward to our discussion. So I will pass it over to Raina and Rob to give them an opportunity to introduce themselves.
Hi all, I'm Reina Soto, and over the past few years, I've been leading our annual Risk Officer Survey, helping uncover key trends and emerging concerns across the industry, and I look forward to sharing some of our latest findings with all of you today. Pass it on to Rob.
And good afternoon. I'm Rob Williams. In my quarter of a century with FRFS, I've served in several roles in product management, marketing, and analytics for our payment services from paper cash to instant payments. So I also look forward to hear your answers in the polls that we're going to share with you today and interested in what feedback we might get.
All right, great. Thanks, Raina. Rob, with that, I'll hand it over to Rob to provide some background on the study, and then Raina will share some results from this year's survey. Rob and I will occasionally jump in to share our thoughts and results periodically throughout the presentation. So hand it over to Rob.
Thank you, Triandos. Over the past few years, we've seen clear growth in fraud leading up to the 2024 study we will review today. In 2021, debit and non-bank apps were the main source of attempted fraud and fraud losses. In the post-COVID year of 2022, we saw a rise and return of check fraud as a new wave of bad actors learned old tricks and shared them on social media and the dark web. In 2023, we saw those losses continue and entrench. Debit stabilized into high, consistent attempt and loss patterns around 67% and 46%. In a few minutes, we're going to talk more about recent changes in debit. In the wake of the COVID-19 pandemic, the trends observed in 22 and 23 highlighted check fraud as a critical concern. It became the second largest source of loss expenses in payment processing. During that time, 6 major financial institutions publicly disclosed significant check losses. Many FIs find themselves in a challenging position, frequently caught between aging systems and the need to modernize a declining product infrastructure. At the same time, an open market of information has lowered the barrier to entry for check fraud. This increased information sharing within the fraud community has allowed criminals to exploit vulnerabilities in our defenses. A notable example of this trend occurred last year with a TikTok check glitch, where social media influencers filmed themselves engaging in check fraud to boost their click rates. This incident underscores a significant gap in the public's understanding of banking and its operation in the U.S. With that introduction, Raina, tell us more about the 2024 results.
Thanks, Rob. Let's talk about 2024. Financial institutions were asked by Payment Rail if fraud was attempted and whether fraud resulted in losses. These responses are shown in the dark and light blue bars of the chart. We then asked a follow-up question about the portion of loss expense. The dark purple line in this graph provides the portion of loss expense for each of the payment types. Now, let's begin looking at debit in detail. Attempts and losses both grew year over year, a consistent 6%. We were surprised by the increase given debit's historical stability and the uniformity in which losses grew with attempts. The portion of loss associated with debit also grew 4% in 2024 to 39% of loss expense by payment channels. Check also saw year-over-year growth in attempts and losses. This growth was disproportionate, with attempts increasing 10% while losses increased by half that amount. Check growth here outpaced the other payment types in 2024, but the ability of financial institutions to mitigate half of that growth suggests that FIs had some success preventing losses. Check's portion of loss expense remained the same in 2024 as the growth in debit moved from other payment channels like wire transfer and ACH. ACH was a mixed bag in 2024 as attempts jumped 9%, almost as much as check. The portion of FIs experiencing losses, on the other hand, held steady with 0% growth. In terms of portion of loss expense, ACH also held steady, declining by 1%. This is an interesting success story for the industry to see. Attempted fraud jump at such a high rate and the industry able to manage the level of loss effectively. Finally, the survey results offered some good news on instant payments like RTP and FedNow, with attempts and losses both declining by 3%. It also didn't register in loss expense for a second year. It's fair to attribute the success to the lower volumes currently associated with these channels. It's also hopeful as volumes and adoption for instant grew significantly in 2024.
Raina, this is a good opportunity to call out one of the customer verbatim quotes to the right of the slide of the survey regarding customers being careless with their banking information. This particular financial institution is expressing a real challenge our industry faces in today's environment. This carelessness exposes financial institutions to undue risk and manifests itself into account takeovers, scams, mule activities, and even viral check fraud events like Rob mentioned before, including the TikTok glitch challenges. The need for financial education and building strong customer relationships are key to helping improve this growing trend. It seems important for our industry to take on this challenge and build relationships with account holders in a way that makes them feel more like partners versus the relationship seeming transactional. This may help them think twice before falling for schemes and more apt to say no when fraudsters offer easy money opportunities.
Financial institutions who experienced losses in check were asked about the types of check fraud events that they experienced. This heat map shows each fraud type and a range of experiences from never to increasing. The type of fraud events are ordered by those increasing or getting worse, as you could see by the purple colors on the right-hand side of the graph. 94% of respondents identified counterfeit check as a common event, and 34% of these respondents described it as increasing. This shows how significant counterfeiting is for check losses at financial institutions. And then the next areas of significant concern can be seen in washing or payee forgery. 83% of respondents experienced washing, with 24 perceiving it as increasing. 90% of respondents experienced payee forgery, with 21% believing the fraud was increasing. The top three types of increasing check fraud use check forgery or altered checks to deposit funds in mule accounts or to open new accounts. We've received industry feedback that this type of fraud may be occurring less with paper check and more often through altering the check image. Now, there's some good news in these numbers regarding what used to be the dominant problem in check, and that can be summarized in the last three fraud events on the bottom of the graph here. Paper hanging, kiting, and float are becoming much less of a concern, with almost no one experiencing the problem to increase. I think we can attribute this success to industry collaboration that accelerated check clearing through image capture and innovations like remote deposit capture.
Serena, so let's take a moment. I think this is another good opportunity to call out another customer verbatim quote, this time regarding the need for real-time data. This financial institution is pointing out a key challenge in a legacy service like check. Most organizations have a patchwork of technology and relationships, creating latency and fracturing data. Fraudsters take advantage of this by exploiting areas where older systems slow down clearing for transactions presented in digital capture devices. As check volumes continue to decline and fraudsters continue to take advantage of these gaps, the need for a more centralized clearing network that enables real-time access to deposited check information makes more sense now more than ever before.
Moving on, financial institutions were asked to classify their organization's experience with fraud through the lens of the industry-developed FraudClassifier model. The model standardizes fraud events into consistent descriptions, enabling organizations to think about their experience and compare that with the experience of others. Now, when ranking the fraud categories by occurrence, FIs identified authorized party was manipulated as their most common fraud category 30% of the time. This category describes circumstances where the authorized party is deceived or coerced into initiating a payment. Examples of these events include scams like tickets never delivered, deceptive romance, or pig butchering. Now, as we look at year-over-year changes, we also see a significant increase in account takeover as the next highest increase. Account takeover is an important trend to watch as digitally initiated instant payments continue to grow. Financial institutions rely more on the security of their customer credentials to secure payments. And when asked to describe their experience with detailed fraud events, physical forgery, counterfeit, and physical alteration were experienced by more FIs than any other type, and were also among the top three worsening events, with 27% and 19% of FIs describing them as increasing respectively. This is consistent with the results from the attempts and loss data that we just discussed. Now, on a positive note, the greatest area of improvement appears to be in products and services fraud, declining 16% from 2023. Declines in this area may be attributed to the maturity of P2P applications, introducing friction, or efforts of social media networks cracking down on bad actors.
I will mention other work the payments improvement team has been doing on the classifier for scams and publishing scam scenarios from actual events. The scam classifier offers a similar benefit to what we're sharing with you here today, and the scenarios are a helpful resource for both staff and perhaps account holders for training. Nothing helps more in this space better than clear examples. These resources are available at fedpaymentsimprovement.org. With that conclusion, some of the survey results, I want to take a second to ask Rob to share some additional thoughts on using this information.
Thanks, Raina and John Does. The survey does a great job of highlighting significant operational risk. Let's take a few minutes to share some practical ways the industry is managing scams, check fraud, and enhancing defenses. The past few years have seen a surge in scams. Pig butchering, romance scams, and accounts payable fraud have deceived account holders, isolating them with shame and embarrassment. Introducing friction at payment origination is crucial for credit push whether it's P2P or B2B. As you evaluate user friction in your own organization, consider limiting certain marketplaces, requiring confirmation for first-time account, and using educational pop-ups to prompt users to think twice before sending higher-risk payments. The key with friction is thoughtful balance. Too many pop-ups annoy customers and make them question your competence or empathy with the experience. When done right, these measures show account holders you genuinely care about their safety and help them avoid these robotic behaviors that ignore security with messages. Effectively, implementation of friction balances user experience and protection, making account holders feel valued. Also monitor and adapt these friction points to new scam tactics. Time spent on user experience of the fraud controls is well spent. Now let's talk about the check fraud. Do you know where altered or counterfeit checks are most likely to be deposited in your organization? Recent publications from ABA, ICBA, and NCUA suggest that more of these deposits are happening in branches, possibly due to dollar limits on remote deposit capture and on some occasion, internal staff collusion. Consider your policies and how effectively they address accounts depositing counterfeit or altered checks. Also evaluate your ability to suspend funds timely for these mule deposits. Collaboration with local post offices and law enforcement can help detect mail theft hotspots. If you have access to analytics, you may be an early notification point to help your own community. The fraudsters are studying your processes and looking for weaknesses to exploit. Like the TikTok glitch, they take advantage of every area of latency they can access. The fractured nature of check and the older platforms associated with them create these opportunities. Have you asked your team to look for opportunities to simplify your technology stack, enhancing both user experience and security? Also review your product offerings for services like positive pay or duplicate notification, ensuring integration of these into your processes minimize delays. So pay close attention to where and how mule deposits come into your institution. To enhance your defenses, financial education is key. When resources like the infographic from Nacha on becoming a mule are super helpful, misinformation can hurt your reputation and lead to increased losses. Staying connected to activity on social media is vital, whether through your staff monitoring or hiring dedicated services. Integrate systems to quickly counter fraud attacks. Evaluate the ROI of technology investments, removing low-value contributors as systems move to real-time functionality. Regular table exercises should assess responses to social media spikes, large-scale fraud events, and known back-office gaps. One important lesson we've learned from FedNow is how instant payments is significantly reducing operational steps in payment processes, minimizing where things can go wrong. As the rate of change continues to accelerate, integrating information is the key to success, so deeper integration of your payment data will pay real benefits. As financial institutions reflect on their customer experience and several critical gaps emerge in the fraud risk management that FRFS has available solutions for, bad actors take advantage of latency in different clearing networks, and the lack of unified data sources for deposit validation complicates fraud management. Once fraudsters get a check or an image of a check, they easily alter the paper or edit the check image. They also leverage the check data to create counterfeit checks. Given the flexible nature of check, clearing networks lack a unified data source of validation for checks on deposit. The role FRFS has with the U.S. Treasury helps streamline access to this information, improving your visibility into potential fraud as stolen checks clear multiple times or are altered or are replicated for counterfeiting. The continued prolific growth of the ACH network and the fintech innovation that drives this growth is making ACH more accessible to bad actors. The industry through NACHA has identified this success as an opportunity to combat scam collections through mule accounts. This is probably intensified by the very success of same-day ACH. New NACHA rules make RDFIs more responsible than in the past for mule account credits. Some FRFS solutions empower RDFIs with tools to meet the need to comply and prevent scammers from harvesting the profits of their schemes. The shift to ISO is only a couple of months away, and the transition creates a new challenge as the historical FAME formatted data is isolated from new systems using the ISO data structures. The retention and integration of this data is critical for reporting and analytics, support, fraud, and risk management functions in your organization. Solutions like Fed Transaction Analyzer integrate the two formats, mitigating the challenges this industry transition creates, and offers affordable solutions for storage and access to historical information after the transition. Instant payments like FedNow require real-time fraud management integration into the origination process. The early life cycle of FedNow requires a careful risk profile consideration and may require you to look at other areas to layer or supplement your origination friction fraud solutions. The most recent addition to FedNow, the Account Activity Threshold, provides inherent resources that help organizations build effective layered controls without significant upfront investment, limiting potential losses. After a fraud event has been identified, expedited dispute resolution is the key to minimizing losses. Time-consuming activities like trying to find the right person to work with slow down resolution and increase the likelihood that the losses occur. Timely resolution of disputes improve your customer satisfaction and deepen your relationship with the customer at a critical time. By securely connecting financial institutions with the right data, we can reduce resolution times by up to 8 times, enhancing customer experience and retention. Treondos, do you want to take a minute to talk more about the FRFS services and what they offer institutions for fraud management?
Yep, absolutely. Thanks for the opportunity, Rob. So I want to take a second to quickly highlight some of the services relevant to the topics we've covered thus far in the webinar. Raina discussed the prevalence of check fraud. To effectively manage the type of fraud the industry is experiencing, preventative solutions must be employed to ensure timely returns, supply information on duplicates, and also potential fraud notifications to help financial institutions best manage funds availability and when releasing funds is best warranted. The two types of services highlighted here, one being Fed Detect and the other Fed Payments Reporter. For check services, have early notification as a key theme to provide more time for payer banks and depositing banks to address issues with their account holders. Raina also mentioned several considerations for ACH, and like check, given the faster rate of settlement, the preventative solutions are a good place to look for turnkey point solutions that address potential fraud with micro entries, origination quality with notifications of changes, early notifications for incoming credits with a variety of business rules and RDFI alert, and the origination credit controls for third-party senders. The Fed Detects service also provides early settlement notification for large same-day ACH debits that could impact your account. FedNow, Rob mentioned earlier, is also developing a series of controls to address anomaly and settlement risk. In addition, as your organization maintains its risk registry and evaluates its risk profile, are the analytics services highlighted in this slide. The two services mentioned here offer multi-year data for analysis. The Fed Payments Insights product provides interactive engagement for high-level institution trends and originators in ACH. The Fed Transaction Analyzer provides FedWire funds data that will be enhanced to integrate the existing FAME data format with the upcoming new ISO 20022 format. And finally, fraud case management, as Rob mentioned, and we're working with the U.S. Treasury and services that were not digital first in a web-based case management system. We believe is the power of the exception resolution service. While not ubiquitous today, the clearinghouse as well as the U.S. Treasury are both committed to leveraging the network going forward, and the journey to ubiquity continues. In the long term, we hope to see other strong efficiencies as financial institutions and government agencies leverage it to improve exception processes that support electronic networks like ACH and also FedNow. So in conclusion, I'm seeing a greater focus in the industry on working together to address financial crime and coordinate better resolutions to these problems. We will be doing this study again in a few months and would welcome your continued participation and engagement in continuing to work together to combat the scourge of fraud and scams. What tools do institutions have available from FRFS today that are already included? So that is an easy question, and I'm happy to answer. So the good news is that the slide that I talked about previously with some of the solutions we have to kind of help our customers manage risk, majority of them are already available to today, depending on your connection with the Federal Reserve Bank. It's just a matter of having a conversation with your relationship manager, potentially completing some forms, and some of them even give you the capability to sign up for some of those services. But ultimately, what we're trying to accomplish from a risk perspective, from a legacy standpoint, and the benefit we have as the Federal Reserve Bank is we have a lot of wealth of data, and we're looking for innovative ways, and especially hearing from our customers like you, how best we can utilize and get that information to you a lot sooner. So for example, the Fed Detect duplicate detection, that's information we have, in the warehouse. We're able to push that information out to you a lot sooner. Our anomaly detection, we're using machine learning to be able to pick up anomalies. Again, we're able to push that information out to you. And we hope just to continue to enhance and grow off some of the services that we have available for you today. And your feedback is certainly much appreciated, and it kind of helps us as we navigate through an agile methodology to kind of continue to develop and grow and enhance our products to best serve you, our stakeholders. So one of the things we're not looking to do, we're not looking to peel and replace and replace what's out there and existing today, but look for new alternative ways that where we can easily give to our customers to kind of help you manage that risk. So hopefully you all have had the opportunity or will look for some of the solutions that we have out there today. Or at least I encourage you to have a conversation with your relationship manager. All right, so that is all the time we have today. I want to thank all of the attendees that joined us today. We are greatly appreciative of your time. We appreciate your contribution to the survey. We certainly couldn't have done this without your efforts, your insights, and your contribution. So you are all much appreciated. I want to thank Rob and Raina for joining me on the panel today and sharing their insights. We greatly appreciate that. And again, if you will be sending an email, I think Raina mentioned this, we'll be sending a follow-up email. So any insights you have or any follow-up, please share with us. And we'll be sending more information and look for more opportunities to engage with you in the future. So thank you all.
Thank you.